What's going on, traders? Hope everybody is having a great day and great evening. Wanted to go over a new market update for the S&P 500, the Spider ETF. We'll be going over a analysis of the bigger picture time frames as well as a daily plan coming into tomorrow. Of course, this video though is for educational and entertainment purposes only. In no way should be viewed as financial advice. And I wanted to take a second thanking all my subscribers and listeners for coming and joining me as we navigate these markets. The support means a ton to me. So with all that out of the way and being said, let's get into some charts here. Of course, we're going to start with the bigger picture, the daily time frame, and just look at the market from a price action perspective. And what do we have here now? Of course, FOMC is behind us, and the markets had sold off a very powerful downward candle here. And we have been watching a compression type pattern, which we will look at here in a moment. But we were watching this potential downtrend, and we were watching this potential uptrend, and we'll go over some more charts that illustrate this. But this is really the concerning thing here, with this strong break below this trend line here. Now, is it possible that we do a recapture? Yes, but with this move now firmly below our key level of that 444, 445 zone that we have been over. I'm going to just put it on here, okay? And now, since we are a much stronger confirmation now under that level, we are confirming now a legitimate downtrend on the daily time frame here. So but I wouldn't be rushing into shorts tomorrow. The risk to reward personally for the short is just not there. So even if we gap down tomorrow, I would be very cautious on initiating any new short positions at this time. We're coming into some important areas here that really just does not give that favorable risk to reward, in my opinion. As you can see, we can even start to bring one right up here in the 438 area. I'll just draw these off here in the 438 area. And then, we have another one all the way down into the 437 area zone as well. So you've got a lot of potential areas where buyers may step in, and this is really going to be the line in the sand, in my opinion. Although overall we are still in a short-term bearish mindset, certainly below the 444 area now, but we would want to wait for some type of a retracement to create another another lower high, and that's when you would want to short into. So we're going to see here, just using our retracement method, we've got this downward candle here. So let's see, if we get a 25% retracement. Let me actually take these. Let me take these off really quickly. Okay. All right, so of this downside move, so what could we potentially expect if we're not going to be looking just short here with this unfavorable reward? Now, these trades obviously are only kind of scalp thoughts, and we are looking at, of course, the daily time frame here. So I don't know if this exactly will play out tomorrow, but one could think about a potential retracement. If we do a 50%, right, retracement of this move. So, I'm just eyeballing it here, but 50% retracement. But we also have the secondary most bearish retracement is about a 25% move. So if you are looking for the short, I would look at least for a move up coming into one of these areas and then looking for a move back in the downward direction. They can even come up into the 50% retracement and come down. That's what you want to look for a more favorable risk to reward to catch this trend. So tomorrow, as far as for me chasing the short, it's going to be a no-go. But that's just some food for thought there, and we're going to look at the chart here with some of those trend lines I was drawing earlier, and see where we can also potentially line up, as we have broken another critical trend line. Although we don't know, of course, if it's a fake break, but it's something that we have to be aware that now we are below this. Speaking though, overall, we were trading in this range, and it's been a little bit tricky here. You can see this balance zone that we've been trading in, and we had one move where we did a fake break above, buyers failed, back into the balance, another one, back up, and a failed breakout move back down to the bottom part of our balance here. And you can see though, overall, now this really has confirmed the hold on, the higher lows. And now we have put in another one right here. So although we definitely have a pretty bearish structure right now, like I said, I'm not looking to chase a short. Even if we gap down, just be very cautious on that. Wait for a better risk to reward and get some retracement in this candle, and then we can you can think about hammering those shorts. All right, let's just take a quick look here now from another perspective. We were looking at, of course, this compression pattern that we were already just discussing. Here's the trend line, but the other thing that we did end up breaking, and this is, it's a big level, so I want to be very cautious about potential fake breaks here. But the megaphone trend line, right? That's where we stopped yesterday before FOMC. We got buyers. That was pretty much the low of the day. Right there off the trend line, you can see nice buyers pushing up, and we basically came into that 444 today. You could see we never got over that level today, and there's pretty much nice confluence there with the 9 and the 20. I'm not really a big EMA crossover kind of trader, but I know a lot of people look at it, and we are starting to get a little of that 9 and 20 crossover here on the daily, so that's also something that some traders may be looking at and worth noting and pointing out to y'all. So let's see, like I said, I'm not shorting this down move, but when I was also talking about that retracement of possibly that 25% retracement, we could also look for a move that comes up, back tests the megaphone trend line up into here, and then we look for the move down potentially into that 437 area. If we do in fact break, then we're going to be pretty much targeting the equal lows here from when was this? So the mid-August to the end of August. So if that breaks, we'll be looking for the 437. We'll be looking back into the 432 area. Now, if you miss that retest, if you miss this move, that's fine. Again, don't chase. Just wait for this to break and confirm, and then you're going to be waiting for another retest here, back, and then back down. Again, creating just higher lows and following that trend along. So very interesting. Changes now in the market. I think we've made that true move out of the range. With this volatility expansion, I thought it was going to be CPI that was going to be what was going to either push us to one way or the other, but it looks like obviously it has been FOMC, Big Daddy Powell, that has finally broken us out of this range. Again, here it is, and now we are out, and boom, now we've got that volatility expansion in the markets. Although I have to say, when we're going to look at it, the VIX really didn't move up quite as much, and for me is proportional to the move as what I would have expected. So that also might be an interesting sign about what is potentially in store for the markets, but that doesn't mean I don't think we're crashing down COVID lows or anything but just potentially a little bit more downside before we start to get ready for the potential rally at the end of the year. All right, let's also look at our bigger picture supply and demand here. Again, here's the megaphone trend line that we have broken, but we still have plenty of areas here as we move into this big area where we have seen buyers step in before. Here's the 437 area right here in this half gap of this demand in this case. We'll have to see if that actually does find a bid there. It's still, even if it does, it still might give us the opportunity for that back test move, finding a bid off 437 and then making this move down like that. So that's another potentiality on a bigger picture that we can look into. But like I said, shorting right here it's not going to be for me. So I'll look for maybe some potential bounce tomorrow and retest. All right, so let's look at what's going on with the breadth here. And you can see we opened up pretty strong today in the trend higher area here, but you can see as the day kind of went on, even towards 12 o'clock, we started to really start to fade down, and then boom, obviously when FOMC came in, everything sold off, and now we're down below the zero line. So we're gonna have to see tomorrow if we open up above the zero line. It's gonna be hard to get much momentum in the market for the upside unless we're above the zero line. But my loose bias is a little bit of a retracement tomorrow, and then we can potentially short into that. Outflows not too strong here. We are obviously negative. We opened up positive above the zero line, but then we came down into the negative obviously with the rest of the market, but it really wasn't as strong. I mean, as you can see on Tuesday, I feel like that they were stronger on Tuesday, not by much, but still a little bit stronger. So I'm a little bit surprised by that, to be honest, with SPEC. Now let's just look at the D-ball and see. Yeah, it wasn't quite. I mean, it's nothing like the outflows here. So that's interesting, but still, it's just a potential clue, and we'll still follow price action. And inflows not horrible. So they're kind of, for me, they're kind of a neutral stance from this perspective, from the inflows of bullish volume and bearish volume. So, but breadth, obviously, here with the events decline is not looking very good, excuse me. So we'll see how that opens up, if we can get anything over those zero lines tomorrow. Sectors, pretty much all a red. Real estate was up just barely. XLP up just barely. Utilities up just barely, but everything else down. So that is not a good look. Okay, let's go over into... let's just look at some VIX stuff here really quickly. Let's actually pull it up on this chart first. Okay, here's one thing, and you're going to see it on the other charts as well. We were up 7% today. Okay, decent. Yes, we did get over... we did get over the daily 9 and 20, but it really didn't make the move that I would have expected, just considering the break of the range. So we're going to be watching the 1575 area, a 16 level. If we can get over this half gap, then we're probably going to see a bit of an expansion in volatility increase, and we'll look to see if we can get up into the 18, maybe the 19 area, into here before potentially rolling over. But there's the chance that we only make it up into 17, into 16, and then fail. But let's see how this develops. But that 16, 15, 75, let's keep an eye on that, in my opinion, coming into tomorrow. Let's just look really quickly here. This is interesting. Now, again, we're not above the zero line here, but the VIX, these are all VIX futures. And we are looking at a little potential head and shoulders here. We're seeing some momentum come in, but we're not above the zero line, so it's not a super warning sign, but we'll watch this here as we try to kind of break out of this base zone This is a little bit more concerning. The VIX 9-day almost over the zero line, so we'll watch if that does get over the zero line. We will see more volatility probably in the market. And the other thing we wanted to take a look at, the ratio of the S&P companies trading over their 50-day simple moving average down here at a potential area where we did see a bounce back up in the market here, but we are clearly below that 50% line. So, the market internals have really been showing us that that rally that we had was not legitimate, because we didn't have enough of the market participating in the move. And the 200 here, a simple moving average, we are below that 50% line. Not by that much. It's reading at 48%, so kind of neutral there. We'll see how that shapes up. Looks like actually a little bit of uptick here, but still we need it back over 50 and to hold. So still looking pretty weak from that overall breadth perspective. Something to keep in mind. All right, let's go into... Well, actually, that was the chart we wanted to look at anyway. All right, here we go. Let's look at some trend lines here from a bigger picture perspective where we are sitting. We are moving along on the axis, so we are going to have to wait to see, but we still have our pivots that we're looking at, even though we don't have our uptrend trend lines anymore. Okay. All right, so we're gonna have to see here again. This is where I was saying where we don't want to be shorting into this move. We're coming into a next bullish pivot here, so risk to reward is not that favorable. Let's wait to see. I mean, we could just come up to that 440 from this perspective. Let me zoom in here so we can do a little draw in action. Coming in. Okay. Again, we got the 25% retracement, but even this pivot here is pretty much that 50% retracement. So again, from what we were talking about, we could see a move like this. I don't know, if we're, there's always a possibility it double bottoms and we bounce from there, but if we break, then we'll be looking for further downside, and at that point, it's going to be heading down to the equal lows, as we were talking about earlier. As our next target. So those are the two scenarios that we can watch out for. But I don't know if it's going to bounce. We'll see. Maybe it comes up, makes a double top, and comes down. But like I said, if we break, that's going to be the next target down at that 432 area. All right. What else do we have from a chart perspective? We'll come into here. Well, we got to get off the VIX. That's going to be the first thing. Okay. See if there's anything from this viewpoint. No, just again that we've broken that megaphone trend line, but we'll keep an eye here. Look, let's I usually don't go on the weekly during the week and just wait till the Friday candle close, but let's keep an eye on this 436.65 area, 60 weekly 20 sitting right there. So could find some buyers off this big area. Institutions and big players in the market with longer time frames, not really looking at though of course they'll look at dailies too, but they're looking at weeklies, monthly charts. So a lot of eyes probably on this area as well as we sell. So keep an eye. One thing I will say, at least for now, from a weekly perspective, that I'm not liking is this kind of M pattern that we're making. Like this. Now again, we have that possible head and shoulders. That's going to be that 332 area. But this M pattern usually is a bearish type pattern, and and we obviously have this high and then this now lower high really printing overall on the chart. So another thing to watch out. W's bullish and patterns bearish. All right, let's look at some bigger picture fibs, and then we'll get into some other charts for the daily plan. A lot to go over, obviously, today being at the end of FOMC. And since we've had a lot of changes now structurally in the market, so this is what we got to do. All right, so here we are sitting again. We're right at that 38.2. Here's some bigger picture fibs that we have been watching. Again, below here, below the trend line, but 38.2 here. So let's watch this 38 area. Again, I'm not shorting into this damn freaking downside move. All the more reason not to, seeing this big next bullish fib here. So let's see if we can get some buyers to come in off of that and get that retracement. But keep an eye on that 438, especially if we drop down and we gap down like 50 cents or something, 75 cents tomorrow. If we're right in this area, I might be favoring that long trade for a little bit of a retracement, and then might end up flipping short later into the day. Just a loose idea of what I might do. But I think it's worth, I'm glad that we looked at this chart so we can note that 38.2 extension right here at this key area. All right, let's look at some day trading fibs really quickly, and then we'll get into our balance zones and close it out. All right, so what are we looking at from a day trading Fibonacci perspective? Now we have sold off. Right now we are trading down actually a little bit under that 438 area. But not too far, from that hourly perspective though. Look, we are pretty extended from the moving averages, so it's not crazy again to think of some type of a bounce back up higher. But if you're not looking for the higher risk trade as far as trying to quote unquote catch the bottom, and if you're looking for a little bit more confluence here, I think the safer trade would be recapturing 439, and then looking for a retest of that level. By that time, we probably would have recaptured this hourly 20 volume profile here, getting pretty thin. So I'm not so sure that they've got too much power to really drive this down much lower, at least in the short term. Maybe more towards the end of the day or into Friday or next week, sure. But as it stands from this view, a little bit of retracement, we'll see. I mean, we could just only come up to here and come back down. So if you want to look for a little bit safer idea, consolidating here back above, and then we're going to be looking for moves, the obvious 440 that really sold, that was really the line in the sand that sold us off, and the low here. So I could see that being a reasonable target. Any long trades though against this trend are more or less scalps. We're not looking to potentially run all the way up. I mean, of course anything could happen, but that first target, probably 440, and getting most off the table at that area would be the sensible thing to do. I'm not looking for much much gusto in the long trade. You don't want to overstay your welcome. But if we do get over that 440, there's that chance that we can come up over it. We're looking for a move back down, and then potentially we could make a move for that 442 area. That's going to be the area where, again, bears are still in control over there. Just think about it. It's still a higher, a lower high overall, and from there you can look for that short, and and note your daily time frames, of course, because that might just end up being the trend line retest that we were talking about from the daily perspective overall. And let's just see if we can find it really quickly, see where it might line up, because we didn't. Lines up actually pretty much with well, it really depends on what time we get there, I guess, in the day. But anywhere from 440 to 441. This is the 25th, so this is the 20th. Anywhere from 440 to 441.50, 60 area, depending on the time of day. So close to that 441 area. All right. So that's definitely something to consider. And let's look just from a bigger picture perspective. Where would the 20, okay, where would the 4 hour be? Okay, pretty much lining up with it there. The 9 is on this 4 hour is 440.70. So pretty much in that zone again. And that actually, at least from this move from the 4 hour perspective, is... Come on, zoom us in, baby. Ay. There we go. Is about 50%, more or less, of this move. But we'll watch out here. I mean, this, again, I'm going to have to take a look. What does it look like on here? Looks like there was a decent amount of volume traded through there. So it doesn't look too thin. But we'll see. Actually, let's take a look at it from another perspective really quickly. But it didn't look too bad. No, a decent amount of volume in there. So it doesn't look like there's any real imbalance in the profile that could tell me that we'd have that ETA time moving up through it. You can see all this volume. Here maybe, and this would give us that 25, 30, maybe 40%. Let's just take a quick look on the hourly. The hourly is a little better. Hourly's a little better. Could give us up into those value area lows. So that's a little bit more, this is better, but I don't know if we'd be able to get up there. But this is a little bit more, what's the word? Encouraging. Yeah, see the top of this breakdown candle, and that would line us up with 441. All right, keep an eye on that. It'll be interesting. All right, let's get into some balance levels and close it out. But like I said, tons to go over, a lot of changes today in the market. So really wanted to spend the time kind of looking at everything together. Okay. All right, so here's the 337. So if we're playing off of that, for the possible retracement, here's the 438. So even in this area, we can have some trouble. 9's right there, right into our 25% of the top of this balance. Again, if you're looking for that safer trade, like I was talking about earlier, you want to see price back over here and hanging out and consolidating. Yes, there is the potential that from there we could just head back over, but I think that would be an encouraging sign. Really even better if we're hanging out over 439, as I mentioned before, from that fib, and that gives us some confluence from that fib perspective that we were looking at earlier. But then we have, of course, the big 440. So if we're hanging out in here, and especially over 438, we can make that move up into 440. And yes, there is a potential short trade there that we can look at. That's going to be a move right into Tuesday's lows, so that would make sense for a potential short trade idea. But if we do get over, then we're going to be looking again at that 441 area, and we might get just a little bit back above. The next area of balance is going to be 441.40, so anywhere in that area, even if you took a short on the 440 puts at 441, you've got about 40-cent risk there, maybe 45 cent, maybe 75 cents if you want to go up to 441.40. All still areas where the bulls are still in control. Just depends on how you want to play it. You could take a starter at 440 and then add into your full position if we do come into that, and then look for that short move back down here into 440 and cover, and then back down into here, cover, and pretty much runners cover at that point, like that. But again, from the long perspective, these are all trades that you can also take, but they're scalps, so we're not looking to overstay the welcome on any type of retracement. We can't deny the overall downtrend and the fact that now we're more in that that bearish bias, clearly below the 444. So until we recapture that, I'm going to be really looking at, sure, there might be the long trade opportunities. Like I said, probably tomorrow I'll be coming in for a little bit of a retracement, something like this, and then looking to shorten into the end of the day, something like that we could see. But even if we get up into this half gap, I'd look to potentially short that as well down here, and even up here I'd be looking into potentially shorting. Once we get over here, we'll start to change the tone and potentially look for those higher prices. But this is still a path for some longs that they could make up there. So keep an eye on that. But what if we do open up below 437 though? I'm not chasing that. I'll be looking again for some type of a back test like this to give us into 436, 435, 50 area. If we break under that, then we'll look for this bottom part of the balance basically down in 435. So that's what I'll be looking for if we do end up actually below 437. So as long as we hold 437, I'll probably be a little bit more on that, again, long side retracement and into a short. But if we do open up below, I'll be waiting for a retest back into 435 and come into here, which I might consider a long at that point for a move back up potentially into 437. And if we do recapture, then potentially that move back into 439, 438 area, where again one could consider that short trade, because overall, what is it? It's just a lower high in this overall downtrend. So, all right, guys, that's all I've got. I hope you took something away from the new plan coming into the end of the week. Hope your trading is going well, and I again really appreciate all the listeners and supporters of the channel, the viewers. If you have been enjoying the content, if you're new, checking this out for the first time, please consider subscribing, smashing that like button. Make sure you've got that notification bell turned on, so that way you are alerted every time we post new updates about the market. All right, guys, have a great rest of your evening, and take care.